Got Nick from Omaha, Nebraska writes in. He goes, hey, Joe, Al, and Andy, love your show and appreciate you answering my last question regarding the earned income tax credit. By the way, my 4 kids do have clothes and eat plenty. Oh, this is the guy that lives off of like $7 a year.
And he's getting the earned income credit.
Crazy. Good for you, Nick. I have another question regarding the earned income tax credit in paying for a new construction home with cash versus a 30-year loan. Is it best to take the loan for around $300,000 at 3 or 3.5% interest for 30 years, or just pay cash? Normally, I would not be on the fence about the decision with interest rates where they are, and I would just take the loan and invest the difference in the market. However, with a paid-off house, I can continue to max out all my retirement accounts, 401k, 457, HSA, around $46,000 annually, or close to that I can reduce my AGI from the $26,000 to $30,000 range to get the max earned income tax credit and child tax credit. For 2021, these credits come out to about $6,700, or come out to $6,728,
right?
And $1,380 for child tax credits, fully refundable. If the tax credit is not extended into 2022, it would still be over $14,000 per year going forward in return or refund. To sum it all up, is it better to take a 30-year loan at $300,000 at about 3.5%, and invest the difference, or get a guaranteed rate of return from Uncle Sam with the tax credit? This is a very good question. I like it here. All right, so the child tax credits ranging from $14,000 to $20,000. That's 46 to 67 return rate of return on the $26,000, $30,000 AGI. I would need at least a 5 to 7% return on the $300,000 annually to keep up with Uncle Sam's generosity. Because, all right, so here's the gist. He gets a child tax credit anywhere from $14,000 to $20,000 a year, because he saves so much money that it reduces his income to pennies.
Yeah, so he gets the earned income credit and the child tax credit, and it comes out to $20,000.
So if he gets a mortgage, now he cannot save as much into those plans because he's got this mortgage.
That's what I get to.
So it's like, okay, well, do I pay off the mortgage and pay cash? So
Sure.
that $300,000 is not earning me any money,
right?
But then I also get a $20,000, additional income.
Sure.
So, what do you think?
Here's what I think. I think the first of all, there's actually another option that you might be missing, Nick, is if you get the mortgage, you'll have $300,000 in your account. You can have less of a salary. You still can have your full withholding. You still can end up with that AGI, just it's more slowly over time, and you're not paying that interest. That is an option. I think when we look at something like this, the classic statement is, if the loan is 3.5%, and you can earn 6, 7, 8%, why wouldn't you do that? Of course, then it's not guaranteed. There's more risk, and I don't know whether you're good with that or not with risk. But anyway, I think I would. What would I do? I would probably. It's kind of a toss-up, really.
Here, I love where your head's at. Here, is that okay, Nick? Your mortgage is going to cost you about $16,000.
Yeah.
Okay. You're going to receive a $20,000 tax credit. So if you take a mortgage, right, and it's going to cost you $15,000, you still save what Al was saying. He's like, okay, well, here, fully fund your 401k, 457 HSA plans. Your AGI is still going to be that low because you're maxing out all these plans. And you're thinking, well, what are you guys talking about? I still owe the $16,000 into, I know I can live off of $7 a year, but, come on, let's be realistic. I got now a mortgage.
Right.
But you still have the $300,000.
Yeah. And that probably makes the most sense because it's cheap money.
It's cheap money, and the credit is paying his mortgage.
Right.
Because he wouldn't receive the $20,000 if he didn't have the AGI as low as he has it.
Right.
So he takes the mortgage. He takes $15,000 from the $300,000 each year to pay the mortgage, but he's also getting an additional $20,000.
He gets it right back.
Of tax, right? So he gets it right back.
So, and the way that you do that is basically you go ahead and fully fund your retirement plans, but now you just have a lower net pay, and you supplement that lower pay with the $15,000 you'll take out of your account, or whatever the number is.
So here's the planning for everyone else, or spitballing, is if you want to max out your and like people are like, I can't really afford to max out my 401k plan, but they have $200,000 sitting in a brokerage account, or maybe $100,000 sitting in cash. It's like, well, no, fully fund your 401k plan. Yeah, your paycheck is going to be lower. I get it.
Right.
But you have other capital to supplement.
Right.
The 401k only the only way to get money into the 401k is from your paycheck.
Sure.
So you just got to play with the money a little bit.
Yeah. Yeah, and I think, and we hear this from different people when we tell them to max fund their 401k so that they can create a deduction so they can do a Roth conversion. They'll say, well, I can't live on that net pay. It's like, well, you got $500,000. Why not just supplement your savings? And it's when you think about it, you end up with the same money. It's just more is in a Roth IRA.
Right. You're just your net worth isn't changing, but how your net worth is going to be taxed in the future changes.
Right.
So it's making sure that you're utilizing all the plans, and then just maneuvering the money in such a way that you're taking advantage of the tax code, like Nick here. He's like, all right, well, here, I want to buy this house. Should I just pay cash so I get the $20,000? Well, wait a minute. You could still get the earned income tax credit.
Right.
Because you could still save that much, but you're just paying your mortgage from another account, and then the credit comes back to you, and you just kind of plop that right back in. So good luck, Nick. Thanks for the question.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.